What is up, Hot Take Nation? I am so excited. I mean, I am an excitable guy. For those who've seen me live in speeches, you know that I'm excitable. I think that the phrase that I've recently coined is I'm really more of an edutainer, where I'm telling you things that are like truly some of the worst news you could possibly imagine. And somehow it's entertaining. And the reason I think I figured out why it's entertaining is because literally if in these speeches and in these blog posts and in all the conversations that I have with people, if I were to hand the mic over to you and you were to say what you really thought with no consequences of what you thought, you would be saying exactly what I am saying. And so really more than anything, I think that there's some education perhaps in terms of some of the deeper meaning behind some of these concepts around financial reporting. Obviously, we talk a lot about SMOG, try and connect the dots on a lot of interesting topics. And you know, I hope you guys are enjoying it as much as I am. But fundamentally, I think it's because people are having an aha moment that's like, thank God I'm not crazy, because he's the only person who's telling me what I just know in my heart to be true. And it's been really fun. I've been having just a ball meeting everybody. And you know, it's crazy when you go to the bar for happy hour and a video of your footwear appears. Like, I didn't think that LinkedIn famous was a thing. I'm not sure how big a thing it is, but I would certainly say in the 15 minutes or so that I've been here that LinkedIn famous leads to my shoes getting on the internet and people getting pretty excited about the footwear. So I thought I would start this episode with answering the question that I've been getting a lot lately, is what is the deal with the fancy slippers? Now, for those who know, I have a Tiger tracksuit. It doesn't come out that often, but when it does, usually I'm in a fiery mood. Was acquired in Vegas. That's a story for a different day. But I clearly needed shoes to match it. I was at the office one day last year and we were kind of Googling around and found this pair of the most incredible, it's actually going to be in the show notes, but they are black gold-tipped tiger embroidered boots. And the toe cap, the gold toe cap, is the face of a tiger. I mean, they are so incredible that I started wearing them just randomly because I love them so much. And I don't know, maybe 3 or 4 months passed, and I was like, you know, what happens when these shoes get worn out? I need to order like 15 of these pairs online. I go. Turns out the world is sold out. It is not a popular item to have embroidered tigers with a gold toe cap, apparently. I think they're amazing, but I couldn't get any more. So what do? I start Googling gold toe-capped awesome shoes on Amazon. I don't even know. Is that a phrase? Can I say that? Googling something on Amazon? Regardless, I was searching for some shoes and these incredible slippers. I mean, incredible slippers show up. And they are $35. So needless to say, I have them in all of the relevant colors. My son likes them so much that he wears them, and on Fridays he wears them to school. And the first time he cracked them out, he was offered $200 for his shoes because, I mean, they look really, really good. Well, I mean, they don't look really good, let's be clear. They look like they would be expensive. They are not. I love them. And so that's sort of my thing now. I just like the shoes. So for those who are curious, that explains the footwear. If you guys want to buy them and at events, come wear them. We'll get a picture done. I friggin' love it. So unofficially, I guess the podcast is sponsored by Gold Tip Jumanji shoes. So that's the story. Let's get into last week. So much to talk about. And I want to start with production growth. I must admit, the post Friday, I was exasperated because well done to companies who have now started reining in their capital budgets. So we're not seeing year over year capital growth. Most of the numbers that I've seen are sort of 10%, 20% down. But I mean, I'm just going to run through some of the majors. And we're obviously focusing on the Permian because, you know, we've talked a lot about gas. The Antero Post, if you have questions, we can talk about it. But I'm kind of gassed out right now. So we're going to go back to the growth basin since the Bakken's not growing, Eagle Ford's not growing, Oklahoma's not growing, Colorado's not growing. The only oil basin that is growing in the United States is the Permian. So we got to talk about those companies. And here's what we see in just a quick, brief highlight. Encana, I'm not going to call them the new name. They're growing production 4%. Cimarex, they're growing production 6 to 13%. Pioneer, 10%. SM, 5 to 10%. Parsley's an interesting one. They're sneakily flat because they closed Jagged Peak after the beginning of the year, and so they don't have combined reporting. So it looks, anyway, their reporting's kind of crazy, but as near as I can tell, Parsley's flat. That's going to be an interesting one. We're going to do a Technical Tuesday on Parsley in a couple months. Really talk about where they're at. Concho, my favorite topic, I guess, 10 to 12%. If you haven't seen their new investor deck, they are admitting that maybe 23 wells in a spacing unit, not the best idea. And then maybe kind of in that 4 to 6 range is really where PV is maximized in terms of like today's prices, rate of return. We can debate spacing all we want, but the bottom line is guys have to up space, and we are way overstated on inventory in all of these companies. That's why I use SMOG. I don't believe that the inventory is 15 years, 20 years. I think it's like 5 years, 7 years, 9 years. And in some of these plays, it's like 2 years. So using 5-year inventory makes a lot of sense. We're going to come back to that. Diamondback also going to grow production 12% next year. So I'm basically telling you all of the big producers, small cap, mid cap, large cap, everyone is still saying grow. And it's just shocking because people know that growing production adds supply. The world is oversupplied, arguably as it is. That's why oil is 52. I'm really excited about the podcast coming out on Wednesday with Aegis. We have a really deep conversation on crude oil, natural gas, commodity hedging, production volume, supply, demand. I think if you're interested at all in what the macro environment for pricing is, you're going to want to listen to that episode. But short term, you look at this, guys are still growing production because they think investors want it, ? I think it's clear that we don't want it. Why are we continuing to grow production? I'm exacerbated, and I'm just going to continue beating the drum. And we're going to do that this week in Technical Tuesday with Cimarex, because I think Cimarex is the perfect example of what's broken in our industry. And it brings us to motivations. What are the motivations for people doing things? Now we can say management teams, we can talk about employees, we can talk about yours truly, we can talk about Greta, we can talk about Bernie Sanders. There is a intrinsic motivation behind everything that everybody does. And to me, I think the Technical Tuesday is going to show it. I think that a Concho discussion would show it. I think a discussion of 95% of these E&Ps is going to show it, is that at the core, the problem with our industry is that it's ESG, climate change, CO2. That is noise. The fundamental issue is almost every E&P company is still so dramatically overvalued, you can't own the stock. I'll just give you an example. We look at Concho's SMOG. So Concho came out with their 10K, talked a lot about what's coming. And their 10K, let's go to the computer. Their 2019 year-end SMOG is $9.583 billion. So SEC reserves forecasted at $55, which is higher than current strip, at $257, which is higher than current strip, with some limitation to their development plan. You've heard my comments on inventory. Concho has $3.955 billion of debt. Subtract 355 from 9583, you're at roughly 6. 200 million shares outstanding. You're roughly 2786 PV10 of the 5-year SEC development plan. Now, there's two things. Number one, well, they're underbooked. Then why aren't we showing investors that have a lot more booking capacity? And more to the point, if you're so cheap, why hasn't Exxon bought you yet? It's a good question, right? Why is consolidation not happening in this so-called I trade low? Well, that's because companies have historically traded on this EV to EBITDA metric. And that metric makes no sense. We are a net asset value business who drills wells at the lowest cost possible, at the highest density we know how, and we have a commodity price which we refuse to hedge for whatever reason, and we move forward as a business, and that is the fundamental value. So if I'm an analyst sitting in my office saying, man, I really want to buy oil and gas stocks, what's the fundamental valuation of Concho? And I do that math and it looks like 29, and that's before interest and that's before G&A. And I don't really have line of sight to what they're going to be doing in 8 or 10 years. And honestly, if it's 8 or 10 years from now, I can do something different. I can put my money somewhere else until the value proposition exists. So I tell my boss, man, I can't buy this stock because of ESG. ESG, so climate change, I'm so worried about it. And CO2, even though it's the people who are using the product, creating it, and they like plastics and we like buying things because we're a consumer nation. But I'm just so sad because of that little girl overseas. She's worried about the future and we're taking away her life. So we better not buy that stock, because if Concho does go to 100 or 110 where it's been, then I look like an idiot because I just told my boss I think it's worth less than 30. But fundamentally, if you look at a chart of oil and gas companies over the last 2 years, 1 year, 5 years, pick any time frame, these guys are falling. Why? Because they are fundamentally overvalued. And that is why you can't invest in oil and gas. And if Concho were trading at $15 a share today, I guarantee you people would think that their ESG policies had improved tremendously and that they would be ready to buy, because I'm really proud of what they've done on their ESG. Valuation. I have met one banker. That way I'll leave it a little bit open. They can guess who it is. I've won one banker in my life that wouldn't sell their grandma for $1. And this is a money game. Nobody does things without motivation. Which brings us to, does it ever make you wonder why the climate change rhetoric has picked up so much, and how a 15-year-old girl in Sweden can start skipping school and starting a strike in August of 2018? Her mother published a book on the family and climate change 4 days later. They're kind of a famous deal in Sweden. Media picks it up. Things get picked up. Next thing you know, she's talking to the United Nations. I'm accidentally building a brand. I'll acknowledge that. I'm not putting money in, and I'm not yet. I mean, I'm traveling a lot and doing some things, but I'm not actively pushing a commercial brand in the hot take of the day. The brand is an organic brand. And maybe you can say I'm not that interesting a guy. Maybe you can say there's just not that many people that want to learn about energy. Maybe you can say I just don't like the sound of his voice. Anyone can say anything. But what I can tell you is I'm not talking to the United Nations. I'm not flying around the world, going to conferences in Davos and talking about climate change. And so it makes me wonder, because nothing is altruistic. Who chose her as the face? And what enterprise behind the scenes realized that if you put a 15-year-old girl's face on television talking about an issue, and you know from politics and what's happening to Mike Bloomberg, no one is attacking Mike Bloomberg for the policies he implemented. No one is attacking Mike Bloomberg for the policies he's talking about implementing now. They're all attacking Mike Bloomberg, the billionaire. Mike Bloomberg, the stop and frisk guy, which I guess is a policy, but I mean, we do things at the time that we think make sense, and then we move forward. They're attacking the NDAs. They're tearing down Mike Bloomberg so that they can beat Mike Bloomberg. And he has spent $400 million, and he has the name recognition because he's worth $58 billion. And yet a 15-year-old girl from Sweden can captivate the world with her story of climate change, and we think it's an organic, altruistic motion. That's just crazy to me. So let's pivot to the last subject of today's podcast, which is maybe it's time that oil and gas stop having policy conversations, and we can talk till we're blue in the face when we are out in Boulder, or we're in Aspen, or we're in New York, or we're in states that don't have any energy in terms of natural gas and oil. And people say, I'm against fracking. And what do we always say? We say, yeah, but there's four levels of cement, and there's 4 levels of casing, and we test the water, and we have surface case vent leaks that we check for with pressure gauges, and we have these incredible wellheads, and we have well control equipment, and we have all of the things. Don't care, I'm against fracking. We're recycling all the water. We've reduced our emissions. We're lowering the cost of energy in the world. We're doing amazing. Don't care, I'm against fracking. Well, you know what? If you're against fracking, you're anti-American. And that's just the fact. And I'm going to tell you why. Here's a little story for Hot Take Nation. In 2014, when OPEC first opened the taps. That was what caused oil to go from 100 to what ultimately was 29 a barrel. And the narrative in the media was that OPEC is trying to crush U.S. shale. At the time, the Bakken was like 1 million and a bit barrels a day. The Eagle Ford was like 1.5 million barrels a day. I mean, sure, the U.S. had been growing production pretty aggressively, but the Permian, we didn't even know if it was really horizontal or vertical. The Permian has been the entire growth mechanism of the world, of the U.S. and the world since 2014. But at the time, we really didn't produce that much. And so what happens? We roll over from 9.5 million barrels to 8 and 5. And the world says, see, that was Saudi just trying to punish us. But the little interesting fact was Russia at the time was producing 10 million barrels a day. And Russia was producing more than Saudi Arabia in 2014. And isn't it interesting that over the course of time, OPEC has never opened the taps? And isn't it also interesting that the Clintons, Hillary Clinton was Secretary of State, she had some fairly anti-Russian things to say. And so wouldn't it make sense if you're a government and you have all of the strategic powers of influence and quid pro quo, you say to Saudi, you know what? I don't really think about the U.S. producer. I don't really care. We seem like we've been growing. We're doing just fine. Let's hurt Russia. So I think you should open the taps. We can hurt their economy. Let's see if we can crush Russia. That happens. Oil falls. U.S. producers for a bit declined 1.4 million barrels a day. And then somehow in 2016, it comes out that the Russians have been influencing the American election using this social media machine that I'm talking about with Greta and with all of the other organic campaigns in the world. And the 3 weeks after the U.S. election where Trump wins, where arguably there was Russian interference against Hillary. And 3 weeks later, OPEC cuts production for the first time since 2014. That is interesting, isn't it? And then it makes you flash all the way forward to 2017 when there's all this anti-frac narrative. And if you remember about 8 months ago, Vladimir Putin came out and said, fracking, I think is the word he used, is a monstrosity that we would never do in Russia. That's interesting. Do you know that 35% of the natural gas that is consumed in Europe and imported into Europe comes from Russia? And do you know that now, even though gas prices are way lower than they've been, they're $3.63 per MMBTU in Europe. And they're $1.94 in the U.S. And LNGs are really the only way that the U.S. can get the supply we have out of the country to feed into another market. And since we know about supply and demand, isn't it interesting that if you provide more gas to Europe, the price would fall? And who would that impact? That would impact Russia. Russia is also the second largest producer of oil in the world. And of the 12.8 million barrels a day we produce in the United States, 7.7 is from horizontal wells, all of which are fracked, 3.8 of which are produced from wells that were not on 365 days ago. And by the way, 110 BCF a day is produced of raw natural gas in the United States, 67% of which requires fracking. And so who stands to benefit if the U.S. bans fracking? Their oil production declines permanently, since all the conventional rock that we could drill was drilled before 2005. We can't grow. We will shrink. We'll shrink back to 5 million barrels a day. That's 8 million barrels less oil in a world that grows demand every single year by 1 million barrels a day. How about natural gas? 67%, roughly 73 BCF, that needs a home in the U.S. and around the world. All of a sudden that declines. And who stands to benefit? Russia. So the next time somebody tells you that they are anti-fracking, don't engage in a debate with them. You tell them that's because you're anti-American. You can always follow us on the web at www.hottakeoftheday.com. Really excited about the podcast coming up this week. Got some great posts, some great technical Tuesdays, and I'm just so excited to be here and that you welcome me into your car. Have a very safe week. Until next time, be safe, be good, have a great week, and bye for now.